repeatable.
So what did you do through a 10-year period through a market cycle? How did you come out at the other end? Because if you walk down the street and find a diamond ring that's worth $10,000, does that make you a good investor? No, it doesn't. You were lucky.
Yep.
Some people say, well, I'd rather be lucky than good. Yeah, then take your profits and retire. So that's a sector that was down 95%, and it's already started to recover. But I think you're going to need some movement on the politics, and then then the big money, then Altria will come in, BTI will come into the market, Constellation with the beverages. You're going to see a big growth in a lot of infused beverages going forward. That's already happening. So I think there's opportunity there. Societies go from less dense power to more dense power. They don't go the other way. You go to the Netherlands and they have windmills there from the 14th and 15th century. They're museums. They don't grind grain with them anymore. The steam engine made them extinct. And so we went from the steam engine to diesel to now we're, in the nuclear age. We don't go to less diverse. So I think now that people are realizing that, and especially, like I said, the global South and East are rationally thinking about their energy policy, and that's where you're seeing the explosion in growth.
Hey guys, welcome to Capital Cosm. Today we have a special returning guest on the show. It is Mr. John Polomny. John, thank you for coming on, my friend.
Happy to be here.
Excellent.
I think this is my third appearance, I think.
Yeah, the hat trick.
There you go. Okay, great.
Yep. So as always, guys, nothing in this video is financial advice. Neither John nor I are financial advisors, so please do your own due diligence. John, let's just take it away right off the gate. What is your general view of the market at the moment? You've got gold that's sitting at record highs. You've got Bitcoin skyrocketing up 72,000. What is going on?
A lot of confusion. So you also didn't mention in there, a lot of times I'm a disciplinarian around intermarket relationships. And so when we see gold breaking higher, we see obviously Bitcoin's making new all-time highs. These things are typically, you're also seeing some of the other commodities starting to strengthen. So typically that happens in a time where you have excess liquidity or the dollar weakening, things like that. But we're not really seeing that, right? We still have Fed funds rate above 5%. We have the stock market near all-time highs. We have real estate near all-time highs, even though we're starting to see weakness in different areas in housing around the country. So it's kind of I have to say, it's kind of like I've been become a fan of like Jim Bianco. He's talked about this. A lot of things changed, I think, during the pandemic. And I think maybe we're starting to find out that a lot of things that applied were pretty obvious, like, okay, you raise rates so many times and then, the market usually rolls over, or, these things aren't necessarily happening like we thought before, just because of some of the things like they've raised rates all around the world. But in the US, for example, we've had this explosion of fiscal spending. It's unprecedented. It's at wartime levels, deficits. And so maybe that's taken the place of the previous. So you're offsetting the rate. So I think there's a lot of things that are not holding up as they used to. And so I happy to talk about it. But just like you mentioned, that's kind of the US. I would say that Europe is probably in recession. Japan's close to recession. China's having some issues. But I think that a lot of place where I really have a lot of my focus, which is in the emerging markets and frontier markets, especially in the global South and East, they're actually doing fairly well in a lot of these smaller countries. A lot of people don't have on their radar screen. So happy to discuss that and my views on that. But that's kind of I think that a lot of people, there's a lot of confusion out there because like things aren't really working like they worked in the past. So, you have the dollar kind of holding up, but yet gold's making new all time. So I ask myself, what is gold telling me? What is, I'm not going to get in too much into Bitcoin. I kind of look at it, it really does well when there's excess liquidity, but we also have this, more interest in it as this halving, however you pronounce it's coming up. So I'm not an expert on that, but I think that some of these things are starting to tell us something that we may be. Remember, these markets are always going to be forward looking. So what are they really trying to tell us? And I think it's going to be what I've already suggested in my newsletter and been talking about and been tracking, the majority of central banks around the world now, not the big ones like the EU or the ECB or the Fed. They're not cutting rates yet, but just about all the central banks in Latin America, many central banks in different areas around the world have been cutting rates for a while as they have got their inflation rates under control. And so you're seeing global PMI now, purchasing matter index at 50 and rising. That usually bodes well for commodities. And eventually the US and I think the EU will, enter into the rate cutting cycle and have the additional liquidity. So I'm a big on liquidity in the short and medium term. And I think, but again, I think the old rules don't necessarily apply. You just say, well, we really shouldn't see gold making new highs with, rates still, real rates being as high as they are. So like you have to ask yourself what else is happening out there.
Yeah. So you mentioned gold there. Let's just dig into that for a bit. What do you think gold is doing? What do you think gold is trying to tell us?
So this is when we start drifting into world events, right? I have a view that we are in World War III right now. It's not, when you make a statement like that, I make a statement like that, people think that's provocative. But what I'm saying is that we have this bifurcation between, we have the emergence, what I've said before, of the global South and East is happening over time, and their value systems, what they want to do is diametrically opposed to the current hegemon, which is the Anglo-American European hegemon that's been basically controlling the world or being the leader of the world. And now that's starting to fade. And you're having this other group of folks like, when I started talking about emerging markets, or the first iteration back in the early 90s, they called these places tiger cubs, Thailand, Malaysia, all these places were growing real quick. Now you have countries like, India was a backwater. China was still kind of just starting to emerge. They didn't have the economic scale to have a global footprint. They now have that. You're talking about China having, depending on how you want to measure it, having a GDP similar to ours. India is on the rise. They have 7 to 8% growth every year. These are large populations. You talk about a country like Indonesia. Most people don't talk. It's 200 million people there. All these places are trying to develop and entering their S curves of their development, where they have emerging middle classes, wealth is being created, and as a result of that, they're going to have more of a presence on the world stage as the percentage of these economies of the total, starts being relevant. They are going to have, foreign policies. So these things are, I think what you have is some little kids. Look at it in a family, right? You have kids, they start growing into teenagers, they start becoming rambunctious, they go into adulthood, and there's sometimes conflict because you have this old power base that's been in power for, depending on how you want to talk about it, in Europe and the US for the last several hundred years, is now arguably in decline, which that's a whole nother conversation. And then you have this other group of people that are emerging, and they have, they are cooperating more and more, and that's necessarily could be to the detriment. I don't think it should be or has to be that way, but that's what I think people have chosen sides, and I think that's what you're seeing. So when you talk about gold, the biggest mistake that the United States ever made was confiscating Russia, or kicking Russia out of the SWIFT system, and confiscating their $300 billion in assets. They sent a message to everybody else around the world, Iran, Saudi, China, anybody else, that if you get, even during World War II and how evil the regime was in Germany, the United States did not confiscate Germany's assets. Either did the UK. Okay, this is unprecedented, and so it has sent a message that the U.S. is going to weaponize the dollar. The U.S. is going to pull out all the stops, use its military, use its dollar, use its economic weight to influence things, and people feel that the rules-based international order means whatever is best for the United States at that particular time. And so I think a lot of people have said, you know what, I don't need to be holding $1 trillion in treasury bonds. I don't want to end up, especially when you have, take China, for example. What I always try to look at this, put myself in their shoes. The Pentagon and people in the State Department and people in the permanent bureaucracy in Washington, D.C. have declared China an enemy. They have sent that message. They have told the Pentagon to prepare for a war with China. China hears that. They know more about it than we do. They probably spy on the community. So why would you want to hold $1 trillion worth of treasury bonds, U.S. treasury bonds, if you're China? And so what I think, this is long-winded, but I think what you're seeing is the last 2 years, you had a record amount of foreign central bank buying of gold. And so these people, they can't put all of their reserves in gold, but they are slowly but surely, divesting themselves to be in a position where that can be used as a weapon against them, a financial weapon. And I think that's what you've seen. And I think now you're seeing more and more buying of gold, just as central banks around the world. It's not retail in the U.S., I guarantee you that. It will happen eventually, but I think that's what it is. It's just been this upward, constant buying pressure by central banks as they slowly but surely use it as a diversification away from the dollar. I think that has a lot to do with it. And
Yeah,
I
and you
think,
see you
go
see
ahead.
the divergence in the Shanghai index versus the COMEX here in the West as well. Like that's telling you something too.
So I think that's a large part of it. And I think that, now that we've broken some technical, I mean, you could talk to other people that are more technically savvy, but I can see a 10-year cup and handle. I mean, gold's going substantially higher over the remainder of this decade. I mean, why couldn't it go to 4,000, 5,000? Why not 10,000? Who knows? You know what I mean? So it's going to go higher. It's a store of value. Central banks look at it that way, and I think once it enters a known bull market and confirms, that will start drawing more interest from traders and retail and other hedge funds. Right now, it's probably where uranium was. I hesitate to say this, but it's not probably the same upside, but smells exactly the same as, you've had this breakout to new highs and the gold stocks haven't basically done nothing. So there's still an opportunity there. You have not to use a thought fallacy of saying just because Stan Druckenmiller and other folks in Elliott group have bought some gold stocks, but money's starting to move in because they see the value there. I mean, Stan Druckenmiller bought Newmont and Barrick, and I know Elliott, they bought some gold stocks. So I mean, you're starting to see the smart money move into the large cap stocks, and then that will eventually, I think, once those get into a confirmed bull market, then you'll start seeing the interest in a lot of the juniors. I mean, the juniors are bombed out. So I think, if you missed out on the ground floor of the uranium situation, it may behoove you to a person to take a look at some of these gold stocks. They're probably where uranium stocks were 3 years ago.
Yeah. So uranium, on the topic of uranium's sitting at $91, a pretty strong correction from the 110 some odd dollars we had a few weeks ago. Is this just a normal correction that we are accustomed to with uranium, or is there more to the story here?
So everybody focuses on the spot market. They shouldn't do that, because if you listen to, I sent out a couple of good interviews. I didn't get a lot of play. I don't know why, but Mike Alkin and then the guy that runs Tribeca down in Australia, they were on a panel together, and they just went through it. Mike said his hedge fund actually buys physical uranium. He said there's 7 or 8 traders that trade 100,000 pounds amongst each other. People need to focus on the term market. People need to focus on the supply demand fundamentals. Yes, we've, a lot of other folks have said the same thing. If you focus just on the spot market, you're going to miss what's really happening here. That spot market's going to be volatile up and down. And if you really understand, if you listen to, Justin Hune or Cuppy said the same thing, these guys are like talking to the actual traders, and there's only a few of them. And like I said, somebody, who's the Uzbeks or somebody at Olympic Dam comes up with a couple 100,000 pounds, they throw it on the market, and these guys go back and forth with it. That's not really what's the main factor. The main factor is the uncovered utility demand over the next decade, which is monstrous at this point. It cannot be filled. I don't see any projects coming on, greenfield projects being built. And you're just going to see, I think, a gradual climb in the term market over time. It's just the requirements are growing, the demand requirements, and the supply is just not coming. I mean, when's NextGen going to build their mine? I mean, exactly. That's supposed to be 30 million. So you had Encore turn their mine on down here in South Texas. Okay, that's great. A lot of these other brownfield mines are going to come online, but all total, they might total 5 or 6 million pounds here in the U.S. Okay, Langer Heinrich, it's coming online right now. Boss's mine in Australia. These are rinky dink in the big scheme of things. You need that next gen mine, Arrow mine, 30 million pounds a year. I mean, you're just seeing the gap over time grow as you see more and more announcements of reactors, and you just don't see anybody saying, yeah, I'm ready to commit $2 billion to building this greenfield mine. I mean, you have the properties in Namibia. Nobody's building them though. Where's the money? And so you have, DASA is probably the only greenfield project that's in Niger that's moving forward as we speak. So other than that, I mean, that's what I think people should focus on. They get pulled into the shiny object again, which we've talked about before. It's $106 a pound, and then everything blows up on X or Twitter. And I get it, and then people come in and they get excited. They buy at the top. They get rug pulled. They're down 30% because they really don't understand the fundamentals of the market. And then they get discouraged and then they, piss and moan about. I've said this before. I'll say it again. The Fidelity Magellan Fund ran by Peter Lynch. They did a study. They were one of the best performing stock funds in the 90s and early 2000s. Same thing with the CMG fund that was run by Ken Hebner. They were some of the best performing. They were averaging like in Magellan, they were averaging like into the 20% per year returns. The CMG fund was like 18% a year. And the average investor in those funds lost money. Why? Because they always bought at the top when they were in the news and then sold at the bottom. So you were compounding at 18 to 20 in one fund and 25% or something like that a year for a decade. And most of the retail investors lost money. How have you lost money in this uranium market? Well, if you bought at the top, when the Twitter blows up and then you get rug pulled, that's how you lose money. Then you swear it off, and then you piss and moan on. I don't even engage. There's so many uranium bros now with all kinds of whacked out views. Guys, you're in a bull market. Here's what you do in a bull market. Okay. You look at the range of and when something sells off, you buy on dips. That's what you do in a secular bull market. That's how you become massively wealthy. And then you have to sit on your dead butt. I'm not going to use swear words anymore. And you just grind it out, just sit there. When you get another big pullback like this, 40, 50% on some of these stocks, you go in and buy. You buy some more. I mean, if you want to just dollar cost average, but that's not what guys do. They're going to trade it. Okay, well, that's how you lose money. You're in a bull market. Nothing has changed except for the fundamentals get better like every month, every week. And so just if you don't have a position, you just wait for a pullback, and then you should already have your buy list, and then you go in there. And if somebody loved uranium XYZ stock at $4 and then it went to $2 and nothing changed fundamentally with the company, if you liked it at $4, don't you love it at I like canned peaches and heavy syrup. If they go on sale at Kroger at 50 cents a can and they usually are $1.50, I tell my wife to buy 20 cans. I don't know. This is like common sense to me. So that's what I would suggest people do. Nothing has changed fundamentally. This is going to be a multi-year situation until you see big mine like Arrow come on, or Kazakhstan actually get their act together, or you see the governments come in because you start seeing D rates of reactors because they run out of material, and they start like hinting that they're going to force Yellow Cake and Sput to sell. Those would be signals to be wondering if we're at the end. We're nowhere near that. So that was long-winded. I'm just tired of talking about it because it's like, don't people like do the research and understand the fundamentals? I mean, if you're trading, go look on the Forbes 500. There's not many traders on there. I'm talking about the wealthiest people. They're mostly, You either buy a business and create it and build it, or you invest in public businesses and own shares in. That's what you do. That's how wealth is created. And you just got to be patient, and people aren't patient. People don't even they get mad. They got to sit in Chick-fil-A line for 10 minutes. Come on. Now you're asking somebody to buy and hold uranium stocks for 5 years. They don't want to do it.
Yeah, the
So
average holding time for a stock has gone down from 10 years to 6 months within the span of the 1960s up until today.
I've told people, I'm not going to talk about my personal situation, but I told people at the start of this bull market, if you do it correctly, can set you up for your life and your children's life. You can add a couple zeros to your net worth, and if it's played correctly. So, I mean, I think I think the fundamentals are, and barring another Fukushima or Chernobyl, you just buy on dips and hold. You got to keep an eye on the individual companies because anything can happen, right? Mining's hard. Saw with Langer Heinrich, they were supposed to start up in Q1. Now they're pushing it to Q2 because mining's hard. So you got to keep an eye on these individual companies and make sure they're doing what they say they're going to do. But I mean, that's why you should have some diversification so you don't get knocked out of the box on just one name.
Yeah, I think the big takeaway there is not to get too cute with this stuff. Like,
Yeah,
it's very simple. The vast majority of the public does not hold onto these stocks for any great amount of time. The way you can get an edge is by actually doing the opposite of that. Right. So
there will be a time to sell. It's not
yeah,
now. It's down the
yeah.
line.
I mean, yeah, these aren't Coca-Cola, Delta, etc. These are not buy and hold for the rest of your life like Warren Buffett stocks. These are cyclical. There's going to come a time to sell, and then the cycle reverses, acts in reverse
Exactly.
until we get to the next bull market. You mentioned diversification. Are there any like hard and fast rules that you play around with when it comes to diversification? Like, do you not invest above a certain percent allocation when it comes to a stock or a sector, or is it really just kind of dependent upon the
So
holding?
what I do, and I've told people to do, every stock that I own, I have written down why I own it, and I look at them as businesses. Some of them are cyclical businesses, some of them are turnaround, some of them are long-term holdings. And so I have certain parameters that I have expectations for what the management has said they're going to do in some cases. And then I will hold on to that business until that's not happening anymore, or until I find another business that I think has better prospects, and then I can sell down. But I don't have any hard and fast rules. No, I mean, uranium is probably my biggest, just because of the way it's grown, allocation right now in my own portfolio. Yeah, and I'm comfortable with it because I own some of the ETFs. I own a lot of individual shares. I own some of SPUT. I mean, I'm happy, but I bought this stuff, years ago. So, when I leave out of it, that's going to be, that's a different story. You know what I mean? I
Yeah,
don't like paying taxes either. This thing has a long way to go. So that's it.
yeah. I saw an interview with, I believe his name is Per Jander. I don't know if
Yeah.
you saw it, but
He's
he
a
said this
trader.
is,
Yeah.
yeah, yeah. So he said this bull market was more like the 1970s bull market than it is the 2007 bull market, in the sense that this will be much more prolonged. Whereas in the 2007 bull market, it was just a huge spike up, euphoric spike, and a big crash down. So
Exactly. You didn't have the supply demand gap that you have now. You didn't have the growth in new reactors. You did in the 70s, right? That's when it was blowing up the industry. France was building out their fleet. We were building out our fleet. Now you have all of that happening in the emerging markets. And slowly but surely, I would say it's without a doubt that the zeitgeist has changed, that everybody understands what a lot of us understood years ago when Malcolm Rawlinson and I had the original conversation about this, is that society, in fact, Vaclav Smil talks about this. Societies go from less dense power to more dense power. They don't go the other way. You could go to the Netherlands and they have windmills there from the 14th and 15th century. They're museums. They don't grind grain with them anymore. The steam engine made them extinct. And so we went from the steam engine to diesel to now we're, in the nuclear age. We don't go to less diverse. So I think now that people are realizing that, and especially, like I said, the global South and East are rationally thinking about their energy policy, and that's where you're seeing the explosion in growth. And I've predicted this before, Germany will eventually reverse their decision and they will build reactors. Their reactors were built very well. top technology. They had top operational. That was the dumbest decision in the history of mankind. I think that eventually that will be when we can all declare, because it's just a physics and math problem, and the only thing stopping a lot of this is just political will.
Hey guys, quick pause. I won't take too much of your time, but I just wanted to let you know that if you want to use and read the same newsletter that I do, Capitalist Exploits, we have a special $1,000 discount exclusively for Capitalcosm viewers of this channel. You simply have to click on the link down below, get your $1,000 discount. Super stoked about this. I discovered Chris and Brad's newsletter, Capitalist Exploits, 4 years ago. It set me on my investment journey. I attribute a ton of what I know to that newsletter. So if you haven't already, check them out. Click the link down below to learn more. Take advantage of this $1,000 discount. You're not going to find it anywhere else. All right, now let's get back to the video. Yeah, that was just about the bottom of the nuclear fuel cycle, just about. I mean, you
Probably
put a pin in it right there. So it's like with coal, for example. I mentioned this to Steve Barton. I had him on the show a couple of weeks ago, and he's really heavy on coal. I'm bullish on coal as well, but I mentioned the fact that really the bottom that you saw in the coal market was when that ETF KOL got taken offline. And ironically enough, a month after that is when you started seeing coal start to rally. So it's like when things like this occur, that's usually your sign of a bottoming process. In much the same way that when your barber or your taxi cab driver or whatever starts talking about their stock portfolio, that's usually a sign of a top. So there's certain markers you can kind of point to.
It actually happened with URA several years ago. They weren't attracting. I mean, these companies, they don't really care. The fund management companies, they just want assets under management. So that was wilting away in the sun, the URA. So they actually started buying like Hyundai, Samsung, companies that had like some nuclear division. They were buying Barrick. And so they had to reverse that a couple of years ago. If people remember, they said, now that this thing's happening, we got to make it pure uranium again, which is what they did. So those are excellent contrarian indicators. You're absolutely right. And you will see also at the tops a lot of times, these are not hard and fast rules. They're just little things that people should incorporate. A lot of times at the top, at the top, you'll see a plethora. You're already starting to see it right now, where you're getting more and more juniors come to market with uranium in their name. And if you follow the corporate structure, it was, Moose Pasture Gold Mine, Saskatchewan oil and gas. I mean, they didn't do it. They're just shells. And then they get reborn with some recycled moose pasture, and they're going to drill for uranium. So you have to be cognizant of that. I mean, how many real competent uranium geologists and development teams are there in the world? Really not that many, actually. So I caution people. You'll see at the top of the last market, there's 500 companies with uranium. When the thing bottomed, there was 3 companies, International Uranium, Cameco, and one other one. And that was it, that were publicly traded. And then we ended up with 500. So those are little, like you said, contrarian clues.
Yeah. What do you make of all of these narratives we're starting to read about how AI and like the data centers, channeling these AI computers, and even Bitcoin mining and crypto are leveraging way more energy than it's going to increase our energy consumption by a significant margin, so much so that it can be seen as a nuclear play. Do you think there's any truth to that?
Yeah, I mean, you're already starting to see. I think I saw the other day Musk actually talked about it well, I guess they call them tweets still, in a tweet. And then I also saw, I think it was Amazon is talking to someone about putting an AWS facility right next to a nuclear field. I will tell you this, just like where you have renewable energy that's in areas like where there's wind farms here in South Texas, or even you'll have guys that, because of the congestion on the transmission line, they have to curtail the machine, which means shut it down, even though it's capable of producing, because you can't get the power out of here because there's too many units and not enough transmission. And so people will have these skid mounted Bitcoin mining. They do the same thing in the Permian. Instead of flaring the gas, they bring a gas generator there, run the gas through it, make electricity, then power skid mounted Bitcoin. So yeah, there's this stuff is going to happen. It's going to continue to happen. Dow Chemical down in Freeport, in the chemical processing, you'll bring in natural gas, burn it in a gas turbine, make electricity. The heat from that goes into a heat recovery steam generator. You make steam for the chemical process, and they're going to replace. They're already working towards, I think, in the next 3 to 5 years to have, initially have these SMRs there instead, so they can get rid of all the natural gas production. So you're going to see more and more of this. That's why I'm very bullish on it. Like I said, barring some major nuclear accident, or if we self-immolate ourselves in a nuclear war, I don't see anything stopping this. I mean, this is a multi-year deal.
Yeah. In the case of the latter, you won't even be around to you've got bigger fish to fry at that point than
Well,
your portfolio going
that's my
down.
point.
Yeah.
Yeah.
So
Yeah.
yeah, so let's go ahead and pivot over to Bitcoin. We mentioned Bitcoin mining here. I know you're not a big expert on Bitcoin, but Bitcoin's also sitting at an all-time high. Is it sending us signals that is it more of a liquidity thing? Is it a sign that liquidity is about to enter the market? Has it already entered the market? Are they front running the Fed? Is it just the halving cycle? What do you think is going on there?
So probably one of the things is the latter. Other people can speak to that. There's certain things that happen around these halvings, however you pronounce it.
Yeah,
But I
halving
think
cycle.
that, yeah, and I think I track global liquidity and central bank activity. It bottomed in the summertime, like in July, global liquidity. It's been so I think that these things I do consider Bitcoin has been very sensitive in the past to liquidity flows. And so I think that and then again, and I don't want any of the Bitcoin people to get upset with me, but I think it really lends itself to FOMO type situations. And when it gets moving, it draws in a lot of interest. And so a lot of money comes into it. I think I'm not with like some of these other boomer guys that I see on CNBC. I do think it has a use case. I've used it before. It's very useful for transferring money around the world. As a matter of fact, I used to work for a company that was extorted out of some Bitcoin. That somebody got in and hacked into our control center, took over some of our plants, and they actually had to pay out some Bitcoin. So there is a use case. Not saying criminal is a good use case. I'm just giving you an example. This idea that it has no use is ridiculous. Do I think that's useful for transaction? No, but it's probably because of the nature of its natural deflationary, inbuilt deflationary, which is what a currency should be, right? I mean, you should be this
It's there
idea
to
that we
mimic the
must
gold. Yeah, the gold
exactly.
mining phenomenon. Yeah, so
And
it's
I
just more
think
effort to.
the thing that impressed me is that I caught on to early on. That's why I've kind of just been in and out of it, playing around with it. Is the fact that a lot of people that grew up on computers or smartphones, I'm talking about younger people, millennials and stuff, that's not a problem for them to transact in it or find use cases for it. They're comfortable with it. And, this is the growing cohort. So I think it has good store value. And so if I'm concerned about a couple things, you do need a power grid. People say, well, cold storage. Again, we're back to the thing. If you go into, an EMP event, but like you said, you're going to have bigger issues. So I think just as a normal course, I think it has a role in a portfolio. And obviously, when you roll the ETFs out, now you're going to get institutional money coming into it. So you've seen the growth of the ETFs that they have. They're proliferating like mushrooms after a rain. So that's the same thing that happened with gold when the original ETFs came out. It allowed more liquidity. I'm not suggesting people should go that route, but I'm just saying it allows that more institutional money. If you're an institutional money manager or a family office, you can't just, you're not, because of the custody rules and the way that you have to do things, you're not going to go and build a Faraday cage around yourself and put it into cold storage and then, write down your key. You see what I'm saying? That's good for, Reddit and, off the grid people, but normal transactions are not done like that in money management. So that's why I think the ETFs were a good boon, but I think that it will continue to move higher. It will continue to do what's normally done. It will make new highs and then go, get sold off and then make another new. I mean, it's just going to continue to do that because the supply is going to shrink over time. And, I, I don't think you're going to go big buying pizzas with it. It's just like I said, for transferring large sums of money and for a store of value and things like that. But um, I was actually shocked that the U.S. government actually approved the ETFs. I think it's positive. I think there's some other things going on behind the scenes, but I think that was an interesting development. It just broadened the available pool of money, so it's becoming an asset class now, and I think that's positive.
Yeah. What do you think of the prospect that we're in sort of this Weimar Republic stock market, in the sense that the economy might be going down? You might have this in hyperinflationary cycle, even though we're not in hyperinflation now, but nonetheless, the markets are just going up with inflation. So in the Weimar Republic, you had hyperinflation, you had economic decay, but the markets kept going up, albeit they never tracked inflation. They only went up nominally. So do you think we have something similar to that ongoing at the moment? Is that why the market just keeps making new all-time highs?
I think it's an overvalued stock market, and it's narrowing its breadth, because I think if you look at the Russell or some underlying metrics, a lot of stocks haven't moved higher. You have this focus on, it's the same thing that we saw. Look, we had the same thing in 1999, 2000, right? We had everybody wanted to be in Cisco or JDS Uniphase. Look at a chart of Cisco or chart of JDS Uniphase. That's exactly what's going to happen to Nvidia and some of these other stocks. It's just going to happen. Microsoft was a darling back then too. Okay, it was overvalued. It's a business. If I wanted to buy a laundromat and it cash flowed $10,000 a month, I'm not going to pay $3 million for that stream of cash flow. And so people get caught up in this. I get into these arguments all the time. You don't understand AI. I understand. I use AI. Believe me, I use AI for a lot of things. Okay, I'm on board with AI. I understand the chips, but I also understand that something has to, I buy into a business because I want to have a portion of the future cash flow streams. Okay. And so what we have instead is we just have a bunch of FOMO. We have a bunch of overvalued stocks that are moving up. And so, nobody wants to be at, Thanksgiving with their ex-brother-in-law sitting there wearing the pants from one suit and the jacket from another one, bragging to everybody about how much money he made in Nvidia or Bitcoin. And then people go, well, this guy's a jackass. If he can do it, I can do it. That's what a lot of this is. Okay. You get into the large rule of large numbers, the market cap of Nvidia. I have nothing wrong. Nvidia is a tremendous company. It's an awesome company. It's a well-run company. They're riding a wave right now. The market cap's $1.5 trillion last time I looked. Okay. I can buy the entire energy, all the energy stocks in the S&P 500. That's Exxon, that's Chevron, that's Occidental Petroleum. I go down the whole list. I can buy Schlumberger, every drilling company, anything associated with oil and gas. I can buy 5 times over for what I can pay for. So if I gave you $1.5 trillion and said you had to buy Nvidia and hold it for 10 years, or you had to buy the S&P energy stocks that are cash flowing and paying you dividends and are undervalued historically relative to the stock market, and you had to hold one of them for 10 years, that's the question you have to ask yourself. That has nothing. Microsoft's a tremendous company too. Their earnings and sales continued to go up after 2000. The stock went sideways for 14 years because it was overvalued, and it had to allow the earnings to catch up. It had nothing to do with the actual prospects. And so you cannot get this through people's head. They get caught up in the easy money. They get caught up in the emotion, and I don't even like talking about this with some of these people, because they will say, you just don't understand, Boomer. NGMI, man. Oh, okay, that's fine. I'll be with you. I hope it works out, because it didn't work out for a lot of people then. It didn't work out in 2008 in real estate. It didn't work out in 1974 with the Nifty 50. In the 1920s, RCA was the NVIDIA. Okay. Everything that goes straight up goes straight back down. It's just, I buy undervalued things and sell overvaluation. There's plenty of countries around the world. I've told people a year ago, buy Brazil. My stuff's up 40, 50% there, and it's still undervalued. Okay. They're in the middle of cutting rates. They're in a rate cutting cycle. Liquidity is increasing. So what am I doing here? I'm trying to buy a business. I'm not trying to, gamble. If I want to do that, I'll just go play. I know how to play craps. I'll take odds and go for it. That's what people are doing, but you can't convince them of it. It's almost impossible. I mean, 1.5, the GDP of the United States a year is 22 or 23 trillion. You're telling me that Nvidia is worth 7% of US GDP? Yes, because it's AI. Well, the internet was the AI of 2000, and they laid all this fiber. And Cisco, everybody had to have a Cisco switch. Does anybody care about Cisco now? It's still a good company, but nobody's talking about it. Nobody talks. JDS Uniphase still exists. Nobody talks about it. Go look at the charts. Same thing. It's the same over and over. Investor psychology playing out. That's
Yeah.
just me though. I'm that's what's worked for me. I'm sure there's guys out there that are going, this guy does no, I did the terrific. I'm glad it worked for you.
Yeah.
Take your
But the
money
key thing, it has to
and
be
move to
replicable.
Hawaii.
Yeah.
Yeah.
It
You
can't
have
just be
to,
like a one-off, getting lucky one time, and it's not, that's not replicable. That's not
yeah.
repeatable.
So what did you do through a 10-year period through a market cycle? How did you come out at the other end? Because if you walk down the street and find a diamond ring that's worth $10,000, does that make you a good investor? No, it doesn't. Make you were lucky.
Yep.
Some people say, "Well, I'd rather be lucky than good." Yeah, then take your profits and retire, and then go read some investment books because you got to be able to replicate this over and over and over.
Yeah, because the key thing is that if you do repeat it over and over again, the chances are you're gonna come out in the red more than you're gonna come out in the green. Like, you might get lucky betting on a shit coin or a shit co at one point, maybe early on, and then you try to replicate that over and over again. By the time you're done, you're back in the red. So
So what happens to these guys is they make a ton of money. Okay, this happened to me before when I was younger, and then you get married to this idea, and you just think it's just going to continue. Okay, and then when somebody comes with an idea, say, well, this is extremely overvalued, selling at 45 times sales, guys. You know, that's like paying $4.5 million for your laundromat. That's cash flow and 10,000. Nobody would do that. That's crazy. And they said, well, you don't understand because it's AI, John. It's going to revolutionize the world. More than likely will, but that doesn't still has to, you know, what's the
yeah,
value?
the internet
You know,
revolutionized the world, but we still had the 2000
exactly.
crash.
That's the
So
exact point. So,
great. So let's go ahead and look at what are some of your highest and lowest conviction plays at the moment, John. I know
well,
it's not.
I'm
I know Nvidia is not on the high list, but
no. So I'm always going to be looking for the goal of my particular certain newsletter and service. Look, I'm 57 years old in 2 months, so I have a lot of investments. Okay, I I have a different view and requirements than somebody that's 27, and so I don't take as much risk. The newsletter is geared specifically to do one thing: find things that can go 3x, 5x, 10x. Okay. So what do I see right now? Right now, I mean, uranium, we caught that wave. Uh, I think we were one of the few people early on. We were a little bit early. Okay, I'd rather be early because that's when the big money's made. That's done very well. What's my next uranium? I was telling my subscribers before this move in gold that start getting long on gold. It was just the gold stocks are just too cheap. They're hated completely. If you look at the gold price relative to the gold stocks, I think they have uranium type ability to go up over time, certainly. But you have to be careful there, right? Because it's the same, it's junior mining. And I say, why not just, if I wasn't going to be someone that was not going to be engaged, just buy the royalty companies. You'll do well. Okay. Um, what else am I looking at? I eventually we're going to see cannabis moved from Schedule 3 or Schedule 1 to Schedule 3 drug. I don't like necessarily to get involved in the actual growing of cannabis, but one of the things that's very difficult for cannabis, I found a company that facilitates cannabis companies, which is still, like I said, illegal at the federal level, but they still are having a hard time getting into the banking system. I did find a company that has navigated that and is providing that service. So I'm bullish on like cannabis. It's eventually going to move from Schedule 1 to Schedule 3. Schedule 1, you're up there with heroin and methamphetamine, right? So Schedule 3 eventually will be legal at the federal level over the next few years because the states are continuing to move in that direction. When you get rid of these boomers that are in politics, Gen X and millennial politicians will just legalize it. So I think there's an opportunity there, but again, you got to pick your spots, right? Because not, I remember when I was growing up, when I first heard about cannabis, I go, I'm not investing in this. I used to know a kid, he had 3 pit bull cages in his backyard on concrete. He'd squirt the crap out the back. He threw a couple seeds back there and the things took off. It's like, how hard is this? You're growing a weed, So, but it is more complicated and there is marketing going on and there is differentiation in the space and it's maturing. And so that's a sector that was down 95% and it's already started to recover. But I think you're going to need some movement on the politics, and then then the big money, then Altria will come in, BTI will come into the market, Constellation with the beverages. You're going to see a big growth in a lot of infused beverages going forward. That's already happening. So I think there's opportunity there. I'm very bullish on some different countries around the world as far as the emerging markets. I think there's an opportunity there that usually goes in cycles. Typically, when the US is doing well, emerging markets will be doing the opposite. And I think you're starting to see a shift. I think over the next 10 years, the US market on a going forward basis is probably not going to do well. And I think emerging markets, various ones, are do well. I think that this takes a lot of work and you got to do some work. Japan has totally changed their capital markets. You've had changes by the Ministry of Finance and the Tokyo Stock Exchange they don't do stock buybacks. They just accumulate cash and stock there. And the managements are not focused on shareholder returns and return on capital and things like that. That's changing now. And so you're able to buy companies over there that are selling for like 25 or 30% of book value that are now saying, okay, we're going to all this cash and side holdings of stock in other companies. We're going to sell that. We're going to buy our own. We're already seeing that happen. But that takes work. You can easily, that would be like what Warren Buffett was doing back when he first started his partnership, cigar butt. There's a lot of net nets there and double net nets there. And the government basically has told people, and the exchange has told these guys, you got to start doing capital returns. You got to start getting the return on ROIs up and the ROEs up. And by paying more dividends, buying back stock. And there's really good guys. If you want to get involved with this, there's probably a half dozen guys on X right now. They're giving the companies away for free. You go up, you verify the information, but again, it takes work, right? And some people don't want to do work. So there's opportunity there. I think that's in a secular bull market just because of the change in capital, way they're doing things in Japan. So I think that's a possibility, but do I see something exactly like uranium? No. So I'd say uranium, probably offshore services like your offshore vessels and rigs and suppliers, and then gold, and then probably emerging markets, and then the rest of the stuff I talked about. But I don't really see something as lucrative and as much of a home run as uranium was. I see a lot of possible 3 and 5 baggers out there over the next couple few years, but you got to pick your spots. What I normally do, this people can do this, so they want to know how I do it. I just go on stock charts and look at the new lows list, and I try to see pattern recognition of an industry that's bombed out. That doesn't necessarily mean I'm going to buy it, but if something's down 90-95% in industry, I'm going to take a look at it, right? Does it have an ability to inflect? Did it consolidate? Is this, like happened in uranium, or what happened even in oil services stocks a few years ago. And so another thing I'll do is I'll go on Google Trends. You can put in terms that it will
that's what I do.
Yeah, and I'll put something like uninvestable in. Guess what keeps popping up? Chinese. You can buy Hong Kong property companies right now for double digit. I'm talking about companies that have been in existence for 150 years. Jardine, what's the other family? There's families that control these things that have been there and intermarried between the Scots that came there originally and the Chinese. They ain't going out of business. And you can buy these things for double-digit returns. And so that's what I look for, stuff like that. And it's like, I like the country of Georgia, the Republic of Georgia. There's a vehicle that trades on the London Stock Exchange. It's like a mini Berkshire Hathaway. It's selling at 50% of net asset value, and they keep increasing the net asset value. And the Georgian currency has been appreciating over the last 2 years against the dollar. And the companies just keeps rocking, building up their businesses and buying back stock. Eventually they will, they'll close that gap. So there's little things like that all over the place. There's a Bitcoin miner that has a perpetual preferred that's continuing to, you can buy for very cheap. They're eventually going to have to, if Bitcoin stays where it's at, they're going to do well. They're moving into one of the companies I talked about that does this, sets up mining to take advantage of curtailed power. So there's all these little niches you can find if you want to do the work. But I stay away from whatever's on the front page. I would, I don't know anything about NVIDIA, so I don't know anything about chips. It's not my thing. I don't know a lot about some of these things. And so, yeah, I think those were some of the opportunities that I'm constantly looking at. But that's how I find things, is just looking for stuff that's terrible and hated and nobody cares about. And right now, I mean, gold stocks are in that category right now.
Gotcha. Well, I think this is a good place to stop here, John. Any last parting thoughts, and where can people find you?
No, I mean, I think, what I've tried to tell people before is, constant education. You have to educate yourself. Look at market history, because what you're going to find is that the psychology repeats itself, because you're dealing with human beings. So the emotions of fear and greed constantly are coming and going in these markets. And so if you could identify, my motto that I say at the end of all my free emails I send out every week is sell overvaluation, buy undervaluation. And so if you look at all of the great investors, that's really been their mantra. I mean, I think it was Seth Klarman or Howard Marks. I make my money when I buy. It's already, if you buy cheap enough, the right thing that is inflecting, you'll make money. So anyways, I'm on YouTube. Just put my name in there. And then on Substack, Actionable Intelligence Alert, we have a free email we send out every week where we talk about these themes in general. And then in the newsletter, we get more specific into various ideas, and people can, if they are so inclined, can take advantage of that.
Fantastic. So you've got a Substack and a newsletter.
Well, I moved everything. I moved the newsletter onto Substack. It's just
Gotcha.
It's a tremendous platform for that. So it's easy.
Gotcha. I'll have to check it out. So, great. So thanks for coming on, John. If you enjoyed this content, be sure to give it a like, comment down below. Let me know what you think. Do you agree or disagree with any of John's points there? They're his highest conviction plays. Do you still think uranium is the number one play at the moment? Or could it be gold stocks? Let me know in the comments down below. You can support the channel by subscribing, liking the video, or buying me a coffee. A link to that will be down below as well. So with that said, you guys, I will see you in the next episode. Bye, y'all.